can imagine that Samsung Pay MSTs really will have some impact because it's a bit late to the market. Should have been there 10 years ago. That would have been a deal breaker, but it still will increase adoption. The other technology is host card emulation. I think it still has a little bit been on the back burner, but it's a very service provider friendly technology. And I think this is one of the missing cases because banks are afraid to be too dependent on a telco, on a service provider, on a mobile phone manufacturer for that reason. When you look at different markets, the impact of Apple Pay will definitely vary. I mean, we saw in the US, which started literally from nothing, Apple Pay had quite a bit of impact, also because a lot of the banks were buying into it, whereas other markets that rolled it out in Canada, in the UK, in Australia, actually Apple Pay was facing quite a bit of headwind because the banks didn't really want the solution because they felt they did hard work in building up the infrastructure and Apple was coming in to basically milk the cow. Obviously, banks thought this is their revenue and sharing it with Apple Pay was something that is not in the interest of the industry. China per se is an interesting example because Apple Pay modified its operating procedure a bit. So they partnered with China UnionPay, and from what has leaked so far, they're providing the service for free. I'm not sure if that is a temporary suspension, and they at a later point will charge the banks for or will ask for a part of the discount fee, merchant discount fee. But for now, I think they are really driving that at a lower cost for the banks, and that obviously will create interest from the banks. Interest from the users is a given it's quite a captive audience in terms of Apple users. One of the challenges in the more mature markets is that card penetration is really high, and the industry has done quite a formidable job in also distributing contactless cards. So for me as a user here, I have a contactless card. For me, it doesn't really make a difference if I tap my wallet or if I tap my mobile phone. What is really missing here is a little bit the added value of mobile NFC payments. The added value of mobile NFC in markets like Singapore, in markets like Australia, New Zealand, where the contactless card adoption is so high, is quite limited. Other markets, particularly more in the developing Asia, obviously don't have this high card penetration, and for them it's almost like the users or the customers are jumping a technology or even two. So they jump from basically using cash, they skip cards, they skip even internet, and they move straight to mobile. And that's what we see happening in China, for instance, driven by players like Alibaba, like Tenpay, who have captured a lot of the online payment market. They have a captive audience among the consumers, and now they are moving to offline transactions. They are not using NFC for now, but I think that is probably a matter of time. So Alibaba, for instance, is still focused on QR code payments, has quite an adoption with retailers. So I think, for instance, just McDonald's announced that they would accept QR code payments via Alibaba. I guess once the technology takes off, I mean, it's a free protocol. I mean, they will try to build their own business case around it to some degree. But once those players move into NFC payments as well, which I believe they would, that's obviously driving adoption in China rapidly. Other markets like Indonesia, Philippines is challenging because very often the acceptance infrastructure isn't there. The way payments generally operate is very fragmented. So in Indonesia is a great example. So you have multiple card systems. You have a lot of closed loop prepaid card systems. So when you go to a merchant, you have sometimes 10 terminals there. So it's a very fragmented infrastructure, and because you don't have a lot of people using credit cards, it's not really embedded in the culture yet. And that makes it obviously tricky for NFC. I think there's not a lot of need from the market. The merchants are not interested in it because they don't think users are going to use it. Users are not going to use it because the merchants don't have the acceptance. So it's a chicken and egg question. And the banks are not really interested in pushing it because they try to push traditional products such as cards because that's the business they know and where they make a lot of money. I believe that we will slowly move towards a tipping point. And I do imagine that Apple Pay, Samsung Pay really will have an impact on that, simply because consumers like those products. They are now exposed to the technology. There is a use case around it. What has changed is that acceptance infrastructure has improved in quite a number of markets. And those will be the markets where we will see a takeoff of NFC technology. It doesn't really make a difference for me if I tap my wallet, if I tap my phone, or if I tap my watch. I mean, it's the same process. It's just depending on the device I prefer. So it wouldn't convince me to make an NFC payment just because I wear it on my wrist and not in my pocket anymore. For that reason, I don't think wearables will have a massive effect on NFC payments per se, but obviously with people getting more familiar and more confident about using the mobile device or other wearable devices for crucial things in their life, and they're really loving those devices, obviously they are exploring the use cases that come with it. So that might have some impact on it.